When I read this figure and this statistic, I was absolutely surprised with regards to the Toronto and GTA real estate market. As it stands right now, active inventory has increased to the tune of 67%. I was flabbergasted when I first read this. In other words put, the amount of homes for sale across the GTA and Toronto real estate markets that are on market concurrently has shot up more than 50%, to the tune of, once again, 67%. Why is this happening? What does this mean for buyers and sellers? And how has this been reflected in prices? We're gonna cover all that, but before we get into it quickly, hello everyone, welcome to the channel. If you're new to the channel, this is Sam from SaberiSixRealEstate. As always, back with another video for you guys here today. On this channel, I like to do everything having to do with the Toronto and GTA real estate market update videos, Toronto condo reviews, property tours, buyer advice, seller advice, and so much more. So if you find any of this content enjoyable or informative, please subscribe, it really helps. Or feel free to reach out to me with any buying or selling inquiries, as many of my clients have from this channel. My link is in the bio. It's easier than ever to book a call with me, whether you have a question or any buying or selling inquiries. But enough of that, let's get to the actual point of today's video, which is active inventory being up 67%. What does this actually mean with regards to the real on the ground figures here? Well, 67% year over year, right? This is looking at June 2024, the most recent month we have in full, versus June 2023. In June 2023, there was 14,000 concurrent listings on the market across all property types, right? This was the active inventory figure for last summer in June 2023. Well, this has shot up, as I just mentioned, to the point where right now, as of the most recent month in full, we have around 24,000 active listings on the market at the same time. And essentially, listings are piling up, right? When we take a look at new listings, for example, as opposed to active inventory, new listings counts the amount of new homes that have come onto the market in a given month. New inventory increased around 12.3%. There was about 15,900 new listings in June 2023. Now in June 2024, once again, the most recent month we have in full, there was nearly 18,000 new listings, 17,900 to be exact. So new inventory every month is also adding obviously onto this active inventory figure, new inventory that's not selling, which seems to be for the most part what is happening. Now there's more nuance to that, right? Different property types are selling at different paces and quantities, but generally speaking, sales are also down as well. Sales were down 16.5% year over year, dropping all the way from 7,400 sales in June 2023, now down to 6,000 sales, 6,200 sales to be exact in June 2024. So new inventory is up, more homes are coming onto the market for sale. Sales are down, so less homes are actually selling, and days on market is further evidence to this, where days on market, so the average amount of days a given listing stays on market, is up 42%, from 14 days average last June to 20 days average this June. Once again, this is being recorded July 10th, so we're not even halfway through the month. We have to base our analysis based on the most recent month we have in full, which is June. Adding to the fact that, once again, new inventory is increasing, sales are decreasing, and average days on market is increasing, so it's taking longer and longer for homes to sell, and less homes are selling relative to more homes coming onto the market. It's only natural that we see a 67% increase in active inventory. But how is this being reflected in prices? Let's break down home prices at the headline figure and by property type. So the headline figure, the average sold price across all property types across all areas in the GTA, came in at $1,162,000. That is the average home across all property types across all areas. This represented a 1.6% decline year over year across this headline figure. But this headline figure is quite general. It's meant to capture everything, but sometimes when you capture everything, you end up capturing nothing really. So let's break it down and take a look at home prices by property type and area. So you have this wonderful chart by Treb on the screen right now, hopefully, and you guys can see the home prices broken down by 416,905 by property type and year over year percentage changes. But off the bat, let's go through the property types. Condos came in at $727,000 overall. For the 905, $657,000. For the 416, $763,000. Once again, not surprising, the average sold price in the 416 will always be higher than the 905. And once again, not so surprising, the 416 has held up much better, although on all fronts, the 416 416 and 905 in total figure. Condos are down. Condos are down the least really in the 416 at 0.9%, and really marginally overall combining both regions at 1.5%. Now, off the bat, this might surprise some people because when we take a look at the total figures, condos are down the least across all property types, right? For example, detached across all areas came in at $1,480,000. Semi-detached came in at $1.1 million, $1,102,000, and townhomes came in at $931,000, respectively. Each detached were down 3%, semi-detached were down 9.3%, and townhomes were down nearly 5%. Whereas condos, once again, were only down 1.5%. This might surprise some people, but this is something you can check the record. I talked about way back, 12 months ago even, really. Condos will probably be the property type that have the hardest time selling, as we discussed earlier, since they're the most affordable option and the cheapest option in terms of housing type. There's only so much on an average basis they can really drop, right? Like the support levels for condos, in my opinion, are going to be higher than a property type such as a semi-detached or a townhome. This is not to say that condos are not going to keep dropping further. They may not. I can't see into the future. This is just simply to say, when we even look at from peak market, when condos were the highest point in the history of Toronto condo market for prices, which was March 2022, at this point in time, condos are only down 10%, whereas detached and semi-detached in certain regions and areas are down upwards of 15 to 18%. So really the property type that has taken the biggest hit insofar as the June figures are concerned are semi-detached in the 416 being down nearly 9%. So we see that despite these metrics that we just discussed earlier in the video with regards to the inventory, sales, the active inventory, days on market, pointing towards a downward trending market and in of themselves indicating a very negative landscape for the Toronto and GTA real estate market, prices for the most part are remaining quite resilient. They are down, of course from peak market and down from spring 2023, but they're still holding quite steady, and a lot of the imaginations and fantasies of condos all of a sudden costing $500K and detached homes dropping below $1 million, going to 2017 prices, 2018 prices. We're not even really quite at 2019 prices on an average basis. I mean, not even close. This is not to speak of what's going to happen. This is just simply to say what has happened thus far. And in terms of what this means for buyers and sellers, it's quite simple. On the buying side, it's a much better time to be a condo buyer. I mean, it's a fabulous time to be a condo buyer. I just purchased a unit last week and the week before that, and we had plenty of time to look. We took our sweet time. We revisited units in some cases. We went to one unit with an offer and then another unit with an offer, and we really treated the condo market as our buffet. Whereas when a hot market, to continue with the analogy, we kind of have to eat through the drive-through, right? With a really cool buyer-friendly market right now, especially in downtown Toronto and midtown Toronto and certain pockets of western Toronto, we as buyers get to really take our sweet time and buy at our leisure. Freeholds are a little bit more complicated. Freeholds in good neighborhoods, good areas are still selling, and oftentimes selling on offer night. Now, they're no longer selling with 15, 20 offers. In some cases they are, but those are really rare. Most often they might be selling on offer night with 2 to 4 offers, getting 2 to 4 really weak offers, relisting, and kind of selling around market value. So detached, semi-detached, townhomes, freehold properties are performing better. And for most buyers, it tends to be more of a moderate market to, in certain really niche pockets and streets, seller-friendly markets. Once again, you have your buyer-friendly areas as well for freehold properties, but those are probably, once again, in not so desirable areas or not so desirable properties. On the selling side, the longer you hold, the better, right? That's what I'm telling most of my sellers who can afford to wait. We are telling them to wait, undoubtedly for condos, right? Undoubtedly for condos. Even if one of my sellers bought maybe in 2015 and they still stand to profit, I think it's better if they wait because they will stand to profit more when the market recovers for condos. For freehold, it's more of a mixed situation. It depends largely on your situation in terms of why you're selling, your motivations for selling. But once again, my messaging for sellers, on average, not speaking to a specific person, is the longer you hold, the better. Anyways, that is it for today's video. Thank you very much for watching. I hope this was informative and enjoyable. And include your questions in the comments, or as always, feel free to get in touch with me. Thank you very much for watching. Stay safe and stay tuned. Thank you.